Let's begin with the big issue, shall we? Still waiting on a Phase 1 trade deal.
We've come to a very substantial Phase 1 deal. We've come to a deal pretty much subject to getting it written. It'll take probably 3 weeks, 4 weeks, or 5 weeks.
That was 5 weeks ago today. 5 weeks later, the Financial Times reporting, quote, the US and China are struggling to complete a Phase 1 deal to halt their trade war, with senior officials in Washington and Beijing still jostling over intellectual property provisions, agricultural purchases and tariff rollbacks after weeks of negotiations. Following that report, a familiar feel to the comments from the White House, Larry Kudlow playing up progress, telling reporters, quote, we're coming down to the short strokes. We are in communication with them every single day right now. And so the equity market rally continues. Joining me around the table here in New York City, Michael Purves of Tallbacken Capital Advisors, Lale Topcuoglu of JOHCM, and Michael Hans of Clarfeld, Citizens Private Wealth. And guys, I really struggle to find consensus as to why we're at all-time highs as the promise of a trade deal continues to be just that, a promise, Michael Purves.
Yeah, it's a promise, and we don't even know how many more phases we're going to get, what those phases will look like. And how meaningful this phase, how meaningful this Phase 1 is going to be. I think there's a little bit of an analog in Brexit in that you have these endless, these processes that just go on and go on and go on. And whether you're in the markets, whether you're a CEO, you just have to kind of navigate around them and get on with life a little bit. And I think that's what you're sort of seeing in the markets, right? You're seeing enough validation from earnings. You're seeing enough validation from the GDP, the economic metrics, the consumer data we got just this morning to say, you know what, there's no apocalypse coming, and some of these companies are going to be generating reasonable enough earnings growth.
What's your take, Lale?
So two things. One, I don't know if there's going to be a trade deal. It's kind of prolonging an extended period of time, so it may take even longer than that. I think two things to remember. One is the tariffs are already in majority of the company's guidance for next year. So that's number one. Number two, what matters is not only the trade deal and what's going to happen to what's going to happen with the existing tariffs. If they don't get rolled back, it's status quo. I don't think anybody expected any more tariffs to come on. So I'm not sure it changes the whole picture. And then this whole back and forth, I said it before, I think you just got to put the blinders on and just ignore it for the time being.
Well, let's try and ignore it. Look at global growth right now. Global growth bottoming, that's the perception of a lot of people at the moment. Is that dependent on a trade truce, on the status quo?
Well, I don't even know if the global growth is bottoming. Let's just say you have a 50% chance of being right. And it's amazing to me that everybody just sort of jumped on this bandwagon that we're bottoming out. I don't know. I think if you looked at the earnings call and the commentary coming out of the earnings calls, it's marginally better than what you heard in 2Q. But I'm not sure that suggests any sort of bottoming out.
Michael Hans.
The market's been in a tight range for the last few weeks, and we've seen several days where we're bouncing around, but net new highs haven't been substantially higher over the course of the last 2-3 weeks. And I think what the trade truce at this point in time does is it removes that lack of that escalation and that fear where volatility is going to come back in force like we saw in previous instances.
There's quite clearly an extremely positive bias to this market in the way that there wasn't back in August of this year, Lale. What underpins that and what tests the patience of this market? What do you think it is?
Well, I think hope is a wonderful thing, right? And as long as everybody believes the growth is bottoming and we're on the path of a trade deal, the market will continue to rally. It's just pure basic psychology. But you have to take that and align it with what you hear on the companies and what you hear on the earnings. And, we get to periods where there's a notable mismatch. And I would argue, it's not clear to me that we're necessarily bottoming out.
I think Powell, he gave us the 75 basis points in insurance cuts, and he said the other day that, hey, look, we're done. I think that, that was an important validation from the Fed that, look, the economy is really pretty good, and that it's really not really that different than it has been in the past. I would argue that the economic condition over the last year and a half has been incredibly stable in the U.S., And it's the sentiment and the bond market that's been incredibly dramatic and volatile. And the
a perception of policy shifts as well around that story, Michael.
Well, absolutely. Of course, you had tax on the upside, and then you had trade on the downside in this year. Having said that, the trade stuff is one of your guests the other day talked about it in a very good, very intelligent way. I thought it was like stock and flow, right? Like, the marginal increases here are subsiding on the trade narrative, right? They flared up in May, they flared up in August. Now they're kind of static, right? And so if we can adjust to some level of, okay, we'll just sort of live with what we have on the table, that's going to provide the ability for the sentiment shift to lift higher. Like, you look at put call skew on the S&P, in September, it was extraordinarily high, right? That helped set up this low volatility that we're having right now.